Good morning, everybody, and welcome to a brand new week of Beat the Bell presented by Kane Capital. The S&P is currently up 7 points. Now, the question remains, will bulls remain in control after what was a pretty bullish close on OPEX Friday of last week? Bulls in control. There it is. Thank you, Ryan. Please remove that from my face. But this is a massive week as we get into the thick of earnings season with the airlines reporting and Tesla on Thursday. Tesla. We got a lot to talk about regarding Tesla on this morning's episode. But before we get there, let's introduce the panel, starting with Diamond Trades. Diamond, good morning.
Alejandro, what's going on? Yeah, like you said, today we have this week rather, we have a pretty interesting earnings week. Not much from the economic calendar, so that should spice some things up. And just really in anticipation of like FOMC next week. So it should be interesting for sure. We'll talk about it.
Absolutely. Ramsey Rippers, good morning to you.
What's up, brother? Good morning, guys. How's everyone doing? Hope you guys' weekend was well. Huge football weekend. But yeah, dude, huge earnings weekend this week as well. We also got Microsoft tomorrow at the close. Some of those big dividend names, Verizon and 3M, tomorrow. So I'm excited to get after it.
Ramsey, I got to ask you, why was this such a big football weekend? You seem pretty pumped.
I mean, I'm just pumped because I mean, I don't really care. I'm not a Philly fan. I live in Philly, but when if the Phillies if the Eagles win, it's a win for me because the city's great, and if they lose, it's an even bigger win for me because I get to shit on Mander and the rest of my obnoxious Eagles friends fans. So
That's a pretty good position to be in. And from my understanding, Noah is a pretty big Giants fan. Noah, what'd you think about Saturday's performance?
Yeah, it was abysmal. It was really an abysmal performance. It was tough to watch. I was actually in enemy territory in Philadelphia with Ramsey, with Snipes, with Mander, and it hurt me physically, but I think I'll be able to recover. I think that the Giants gave me more than I was expecting anyway, so
That's
it
good.
is
That's
what it is.
positive attitude. I gotta at least commend you for taking your talents to Philly as a Giants fan. I can't imagine the amount of shit that you were getting. That alone takes stones. So props to you. Noah, we're gonna go right back to you as we get the show started here with Fed forecast, economic calendar, and earnings. What do we got on the radar this week?
For sure. So let's start with the economic calendar. I think that that's the best place for us to start. If you look at this week, like I said earlier, it's really not going to be a market moving a week full of market moving news, right? Like we have basically nothing today. The ECB president is going to speak at 12:45, probably the most important thing. So pay attention to that. Tomorrow we've got S&P Global Services and Manufacturing PMI as well as Composite PMI. Tends to be a mildly impactful like news release, nothing too crazy. Wednesday, the Bank of Canada does their interest rate decision, which will definitely matter. So pay attention to that. And then on Thursday, we've got GDP growth rate in advance. That's going to come out at 8:30. Durable goods also comes out at 8:30. Retail inventories, and then the weekly jobs claims. That's going to be on Thursday. Friday is really going to be the biggest day of this week. So on Friday, we've got core PCE coming in month over month. We've got personal income and spending month over month. We've also got Michigan consumer sentiment and pending home sales at 10 o'clock. So Friday's probably going to be the biggest day for this week. And then again, like I said, next week we're going to have a lot more news with FOMC. But this is just sort of the quiet before the storm, right before we head into FOMC and even more big tech earnings next week. But since there's not too much going on at home, let's go ahead and check up on one of the bigger stories, right, that we've got in the international world, and that's going to be the China reopening, right? So China said it's in the process of really loosening those COVID restrictions that have been in place for over a year. And so what does this mean for the economy? What does this mean for the markets, right? So from the bull side, you can say that the China reopening is going to help smooth some supply chain constraints and supply side bottlenecks, which should be good for prices, right? Those supply side issues have really been a constant upward pressure on inflation ever since the start of COVID. And so the loosening of these restrictions should free up some of that supply, helping to bring prices down, right? And as Markets and Mayhem actually tweeted this weekend, we're seeing record inflows into emerging market equities and debt, showing that big money really does think that this reopening story has some weight behind it and should really spur the Asian economy. And so that's one thing that you should look at on the upside. To the downside, though, much like happened in America over the lockdowns, the Chinese economy has and Chinese households have built up a lot of savings, right? As they haven't really been spending that much. And so if you take a look at this chart, China's got their households have about $720 billion in savings. That's a record number for Chinese households. And as these lockdowns sort of come off and they start to reopen, you're going to see, much like you saw in America, that pent up demand starts to apply some upward pressure on inflation, right? And so you're going to see a lot of these spendings start to get put to use. And that's obviously going to make it a little bit more difficult to bring global inflation down on a broader scale. So if you think about both of these conflicting factors in the long run, they probably do cancel each other out. But in the short run, it makes central bankers like the Fed and any other central bank around the world, it makes their job really difficult in the short term, trying to forecast inflation and then thus try to forecast where they should appropriately put monetary policy. So I think that that's going to be an interesting story that we have to watch develop throughout Q1 here and really see what sort of impacts China reopening is going to have on both inflation and the broader economy. The last thing we'll talk about here is earnings season coming up for this week. And so earnings season is continuing to chug along into this last week of January here. As you can see, we've got some more heavy hitters, particularly at Microsoft on Tuesday and Tesla on Thursday. But otherwise, what are you guys looking out for coming up this week within the earnings calendar? It seems like we have a ton of good names here to pick from.
Yeah, so I think the most obvious name here is, of course, Tesla. I think that a lot of people are going to be turning that way. That'll be an important earnings release. And what I'm really going to be looking for are those production numbers. So if you guys remember, in Q3 of last year, Tesla told us that they expect to grow 50% year over year for the foreseeable future in production and delivery numbers. I'm interested to see how the China slowdown impacts that. They, of course, have a factory in Shanghai. And I'll be sharing a story regarding Tesla deliveries. It's a personal story. I don't personally own a Tesla. I didn't buy a Tesla, but I know somebody who did. And it's interesting. They're implementing a pretty cool marketing scheme that I'll talk about later on in the show. But yeah, those Tesla production numbers are going to be very, very important for investors.
I agree. Anything else stand out to you guys on the earnings calendar?
Yeah, me personally, I mean, I'm going to be looking a little bit different, not really paying attention to the large cap tech as much. I'm actually checking out Verizon and 3M, those healthy dividend stocks. So, I mean, Verizon had a super large drawback last year, and really in comparison to the rest of that sector, with rising costs, with their 5-year rollout plan, and just an overall decrease in growth. They have a great dividend, around 6.9 to 7%. So I want to see if they bounce back in Q4 of 2022 and close the year strong, possibly give me a little bit of incentive to purchase that stock, just mainly for like the dividend purposes. And also 3M. Ryan, if you can open that up. Yeah, when is that? Tomorrow at open. I was also looking at 3M, one of the largest industrial companies. I mean, they basically own everything from Scotch tape to, I also believe, Ace bandages, just so many different parent companies that they own, have over like 100,000 patents worldwide, globally. Once again, another one of those companies that's been struggling in recent years, but I want to see if they can start rounding that curve and turning the corner. And I think that there's some pretty solid dividend ads. Snipe, what do you think?
I think Microsoft is going to be pretty interesting this week. I'm probably going to be watching Microsoft more than any of those other names for earnings. I could personally see Microsoft going both ways, but I could definitely see a pretty large impact either way that it goes.
Yeah, the last thing I'll say before we pass back to Alejandro, the Ramsey brought up a really good point, and even in the Markets of Mayhem interview that we did a couple of weeks ago on Trading Camp Pod, he mentioned how he expects some of those more industrial names to really outperform this year. And just looking at Tuesday before the bell, you've got 3M, you've got Verizon, Johnson & Johnson, all names that you would think about in that more industrial space. And then you've also got Halliburton, one of those energy exploration stocks he was talking about. So definitely some interesting names reporting, maybe not the sexiest of companies, but definitely something to pay attention to if you like to get into your dividend stocks, XYZ. But that'll wrap it up for Fed Forecast. We can pass it back to Alejandro.
Beautiful. Thank you, Noah. Great job manning the ship there without Manor this morning. Let's talk about the system. So we, of course, got the sell signal last week. That was the trade that I took. It worked really, really well. The S&P bottomed about 100 points extended from the 50 SMA on the 30-minute chart, which, as you guys know, and if you don't know, that's our take profit rule. So I made about 70 points on that short trade. So then it was back to just being patient. Friday, we, of course, saw that run up in the S&P. We broke over the 50 SMA late day, and there was a squeeze into the close. I didn't take that trade because of OPEX Friday, especially in those last 45 minutes of trading. There's a lot of volatility. It becomes super unpredictable, so I wasn't confident opening a new trade. But what I'm looking for headed into today, guys, is continuation over the 50 SMA. If bulls can hold that 50 SMA, and we see strength early here in the pre-market, which we are relatively. Remember, a few hours ago, the S&P was actually down. The futures were down about 5 points, now up 6 points on the morning. If we continue to see strength, I think it's likely that we see a bullish start to the week over the 50 SMA and a buy signal of the 10 SMA crossing over the 50 SMA on the 30-minute SPX chart. But let's take a second here to think about the bigger picture, okay? We know we have that daily downward trend line from the January 2022 highs. Let's not forget that we are once again trading into major resistance. If that trend line is broken, we could see an explosive short-term squeeze higher. I truly believe that. But this is a tricky area to trade. It has proven that every time we've gotten up to this level. So for me, how am I managing trading in this area? I'm trading smaller size if I'm going to take a trade where I'm sort of predicting what's going to happen next. And I'm starting to think, if I get long here because I have that bias that the market is going to continue to trade higher based on what the system is telling me, it's going to be small size, knowing that on that bigger time frame, we're trading into heavy downward trend line resistance. So something to keep in mind, guys. And before I wrap up here, let's take a look at the hourly chart. As you guys can see at the close on Friday, we also broke over the 50 SMA on the 1-hour SPX chart. So both charts are telling the same story. It's going to be an interesting week. The other thing about earnings seasons, guys, is that a lot of this stuff ends up going out the window. Tesla missing, Tesla beating is going to be important for the market. We're going to see those larger names, the big tech companies that start to report, have a large impact in the after hours and before the market opens on the market. So trading based solely off of technical analysis, you have to tread carefully. You have to understand the entire picture. It becomes more dangerous taking trades from one night to the next morning, swinging stuff overnight, because again, the market becomes more unpredictable. There's a lot at stake. This is a very important earnings season. So let's just keep that in mind as we go into this week, but it should be good. I'm very excited to trade. That'll wrap up the system. Let's go over to Ramsey for Bet the Bell.
All right, guys, let's do it. Bet the Bell, loaded segment for today for the guys. So first question, you guys know what it is, green or red today. I'm going to pull up this chart. Ryan, please pull up that first chart for the guys. So basically last week, what was it? Tuesday or Wednesday of last week, other chart. Tuesday or Wednesday of last week, we had that trend line test on the indices, on SPY, SPX, clear rejection, massive rejection. It was looking like the Bears were going to come out with the funeral outfit. We saw Sal Money Mander come on with his black tuxedo suit. I don't know if anyone noticed it. It was a funeral, right? Not so sure about that. We had a really nice recovery Friday morning, massive rip into Friday. And it looks like we're going to come back up and test that trend line possibly today. So the indices slightly up this morning. SPY is about $1 away where we're trading at right now in the pre-market from retesting that trend line. So huge earnings week coming up. I could, see the market kind of waiting for those large cap tech to present itself. Microsoft after the close on Tuesday and Tesla later in the week. What do you guys think today? We're coming up to this trend line, green or red? Let's start with you, Diamond.
I'm going to go with green. I do think that even just looking at that chart, this seems to be like a really serious preparation for what's to come next week in terms of FOMC and even more earnings. I believe Apple reports next week too. So it seems like even like if you look at that most recent high that we made, the December high, and then that December low, we're literally trading right in the middle of that. So like we've just been sort of consolidating here, as the market waits for that next bit of news that's going to send us higher or lower. But for today, I'll say green. Maybe we'll get up there and retest that trend line.
Alejandro.
So I just finished talking about it. This area is going to be super tough to trade, in my opinion. Lots of fake outs. I think that today, however, will be a green day. I'm pretty confident we start the week green based on what we're looking at on the system. But this is a very day-by-day, even hour-by-hour type trading environment that we're about to step into headed into earnings season.
I see Snipes grinning and like rubbing his hands together. What do you want, Snipe?
So as the defending champion of green or red, I'm going to go with red today. And I agree with what Hondo said. Today is going to be brutal. It's going to be it's in a tough range. We're definitely going to see lots of fake outs, just like he was saying. But I'm going to have to go with red. and I want you guys to keep the score this week on how many green versus reds I beat Diamond in.
Okay, I will. I'll keep it. I'll keep tabs for you.
We should start keeping the score for everybody. We can have it up here on the show whenever somebody pops up so that you can see their record, because, you know, you don't want to be listening to people like Mander who are like 0 for 20 doing this. You want to be listening to the people that have at least some sort of credibility.
Yeah, I thought about that this morning, right before the show. We got to make that happen. Mamba, what do you got?
Well, first of all, good morning. I'm gonna say green. I'll elaborate on my market analysis. That's it. That's all I'm saying. Green.
All right, nice. Ryan, can you pull up that chart again real quick for this the first question? Listen, I'm also kind of seeing a little bit of an inverse head and shoulders, the peak of that. What is that? October low. Who knows? We'll see what happens. Got to get past this trend line. All right, next question. Will the market break December highs this week? If we can pull up that chart again for question 2, Ryan. Question 2. Riding up this trend line off of our low of year October lows, you see that, you know, we have somewhat of a double top over at those December highs around 410, 412, a little bit of a supply zone off of that rejection on that trend line last week. What do you guys think? You think this week the earnings season can send us through these December highs? Let's start with Alejandro.
I'm going to say no. I'm going to stick to my thesis of the market isn't going to do much this week. Again, I think it's just going to be a range-bound week, tough to trade. FOMC next week. We're going to need a massive – I don't think people understand, you know, like this trend line and those recent highs that you're mentioning, that's not just any level. This is a level that has been tested. This is now going to be the 6th or 7th time since January of 2022. We're in a very, very strong downtrend. I could see FOMC dovishness potentially sending us over that level. This week, I don't think there's enough to do it unless something crazy happens with Tesla, but we'll see.
Gotcha. Fair. It's close. It's really only about 3.5 to 4% away. Snipe, what do you think?
You know, I'm going to have to go with no. I think very, very, very slim chance, but either way it goes, I'm going to get bags.
Noah.
Yeah, I'm kind of in Alejandro's camp with a no, barring like some crazy earnings from Tesla and Microsoft. I just don't know what would give the market that push ahead of FOMC to do that. I'm not expecting it, at least. I'm gonna go no.
And Mo Mamba.
Nope.
You heard it. You heard it from Mo. Nope. All right. This is going to lead us into our last question. Everyone's been talking about Tesla this morning. Let's talk about Tesla. So, recent article came out, a little bit of news on Tesla. Price reductions for the best-selling EV in America. The Model Y right now has a discount of about $13,000 off the sticker price, in addition to eligibility for the new tax incentive up to another $7,500. So, in the last year, it's evident there's been an explosion of competing EV models for Tesla. As that number continues to grow, people within Tesla, their concerns is whether or not the demand for those vehicles will stay as high as it has been in the past. At the end of 2021, there were 33 EV models available in the United States. And just a year later, at the end of 2022, that number's jumped to 53 models. So last year, Tesla's deliveries were up about 40%, had a 1.3 million vehicles delivered. In 2021, from the 2021 number, they're up about 40%, but shy of the company goal, which was 50% or more. Faced tons of production issues last year and even this year as well. Not only just China, but also here in the U.S. and Texas. What do you guys think? You think, is this news like bullish, these price reductions, or is it BS? Me personally, I think it's. It might raise the demand even more with a pretty competitive market now. This EV market moving into the later 2020s, especially in 2030. It basically means that EVs is the future, right? Like, I'm pretty sure that in Europe, every single car that's going to be produced after 2030, or maybe even 2025, can only be electric. So, what do you guys think? Is this bullish news, or is it kind of just BS? And you got to stick to the fundamentals here. Alejandro, what do you think?
All right. So one thing I'll say about Tesla, the automotive industry as a whole in the year 2023 is likely to struggle. we know that the price of a car effectively goes up as interest rates rise because, of course, people buy cars with debt. So let's just kind of put aside the price of Tesla stock for the entire year of 2023. That's my mindset. These price cuts, to me, what it shows that they're doing is Tesla is obviously aware of these demand issues that they're likely to face in the year 2023, but they're working extremely hard to maintain that market share, and they're looking to dominate the market. So this is going to give them pricing power, and a lot of others, automobile, especially these EV producers, companies that are trying to tap into this space, they're going to be put with their backs against the wall. So that's the first thing I'll say there, that this is clear that Tesla is still trying to maintain that production, those production levels that they promised in Q3, which is an average annual growth of 50% year over year on those deliveries for the foreseeable future. An interesting anecdote that I'd like to share, and a marketing tactic that they're using. So my father recently purchased a Tesla, and I'm not sure if you guys are aware of how it works, so I'll explain it briefly. You have to sort of place your order months in advance before you can actually get the car. It's not like going out and buying a Kia or a Toyota. You don't just show up at the dealer. And so he put that order in, and by the time it was the time had come to get his car and the delivery was ready, he was having second thoughts, and he wasn't responding to Tesla's emails. So, of course, you're not binded to actually get the car. You put like a $500 deposit in or something. And Tesla emails him with a $10,000 discount straight off the top of the ticket price a week before the car was scheduled to be delivered. So, again, this is Tesla, to me, doing everything they can to ramp up those delivery numbers. They want people in Teslas, which is what, as an investor, I feel is most important moving forward. We know that all these companies are going to struggle. That's the obvious as interest rates continue to go up. But Tesla, I think, is in a very, very powerful position as more and more people start to drive these cars.
Thank you, Hondo. Snipe.
Well, and my dad did end up buying the Tesla. He got the Tesla because of the $10,000 discount. That was that's what sealed the deal for him.
That's awesome. He's probably stoked. Congrats to him.
Snipe.
Well, I'm going to say one thing about Tesla specifically. When you look at the company, they've had a constant demand, and they've had harder times in the past meeting this demand with their supply. And I think with Tesla's approach and their business model, they're going to thrive if their demand outweighs their supply. And speaking from personal experiences, last year even, it's a little bit different because I wasn't looking at the Model Y, but I was trying to get a Model X, and I was looking at it, and I could say a couple of months went by, no luck there. It's really hard to get your hands on a Tesla back then. I think that Tesla wants to kind of maintain this, and I think they're looking to get those orders coming in, just like Hondo was saying. They want to sell cars. They want people inside of Teslas, and that's something that I do like to see as an investor. I personally think that this is bullish for Tesla.
All right, good point. Good point. Diamond, I know you got something to say.
Yeah, I struggle to see like short term how it's bullish. I mean, Guggenheim analysts have the price cuts leading to like a 60% decline in gross margin, which is just your revenue minus your cost of goods sold. Obviously, as you bring your top line, your sales point down, you're going to lose some of that margin. So that's one of the areas of concern that I would see. But I guess if you were a like long-term Tesla investor, you would look at that and say Tesla's had the best margins in the industry for so long, like significantly higher than their peers. So that shouldn't be much of a problem. And you're going to see what's going to happen is you're going to have other companies in this space start to do the same thing, right? We had so many price increases throughout the automotive industry because of the inflationary pressures on the material side. And so it wasn't just Tesla. Tesla raised their prices, like I think 12 times over the past 2 years. And you had companies like Ford, General Motors doing similar things. And so you're going to have to see them now fall in line and start to cut prices if they want to maintain their market share in the space. I think long term, if you were trying to make a bullish case, you would say, okay, this decrease in price right now may hurt their margins, but in the long term, it's going to help them gain market share in an EV market that, like Paxton talked about, is expected to just continue to grow right throughout the next several decades. So if you're a Tesla investor, if you're long Tesla, that's sort of, I guess, would be the long-term outlook that you would take. But short-term, it really is hard to, describe how this could be bullish for the company immediately.
Mo.
I'm actually with Noah on this one. Another thing is, you mentioned the tax credit. That tax credit doesn't just fall under Tesla. It falls under specific criteria. And there's other vehicles outside of the company of Tesla that do fall under that. So, and then if people do come and purchase a Tesla, why are they purchasing it, right? It's maybe due to gas prices, higher gas prices, and they prefer that electric vehicle right now, right? And now you have a lot of competition. It's not like before. So I am calling BS. I am with Noah on this one for the points he mentioned. Just too much competition out there, and as that sector continues to grow, there will be better vehicles, better quality. And I did honestly go to a Tesla dealership to purchase one before. Did not like their quality of the cars. Did not like it, unfortunately. But yeah, that's my take.
Right. No, I'm with you. I honestly completely agree with you and Noah. I mean, look, Dodge just discontinued one of the purest, most famous American muscle cars in the history of America. 1970, the Dodge Challenger has been around. The 2023 is the last year for that car. They're completely switching. And
dude, the Mustang went to a Mach E. Like what?
Yeah, Mustang too. I mean, it's kind of crazy, but you make a good point, because who do you think is positioned better to make a transformation into that EV market? I mean, obviously Tesla, they've been doing it since the birth of the company, but I mean, Ford, they've been around for 120, 130 years. They're going all out in this thing too. I think that they're positioned very well. It's going to be interesting to see how the competition arises. As you see, I mean, over 50% increase from EV vehicles available to purchase in the US from just 2021 to the end of 2022. So we'll see what happens. Let's pass it back to Alejandro.
All right, guys, the last thing we're going to do here on the show is go over to Mo, who's got Mamba market analysis for us this morning. Mo, take it away.
Yes, sir. Okay, we're about 25 minutes before the bell. Won't take too long on this one. So SPY analysis. This is the daily time frame. This is the main trend line everyone's talking about, that purple maroon color trend line. Now, our last market analysis was that we did have this as a target. This was our daily demand here. This was the demand zone to get through for further downside, right? We never got it. We held this demand pretty well. Wasn't the strongest close, right? We closed right on top of this daily demand, but it did hold, right? That was our target. And I was looking for a dead cat bounce. Honestly, was thinking the dead cat bounce would come down into, after breaking through here, bounce off this, come back and test this zone over here, the small zone we have on the daily time frame, and then come back through into that 383.3 level. Bullish close. I mean, nothing's telling me here downside unless we come back through this zone. And mainly this level right here, this 392.8. So I might have to bring this zone down here, right about there. Why? Because this is a gap level. This is a gap level right here. So I have to watch that level 392.2. But we did close back above this supply zone. So now this becomes a demand zone, right? Now, the big thing is, do we get through the trend line? This close makes you think that, right? But I'm not ruling it out. I'm not going to rule it out. I do think today is green. I think, like the boys were hinting at, it might be a tough day to trade. Come up here, test this, maybe chop around. If we do get through, I'm going to call it out right now. I'm going to say it's a fake out. I am going to say it's a fake out. I think we might run up into this 402.8 level. This is a really good level, 402.8 level, and then come back down. I can't just flip my bias, bias on the macro outlook of the market just quite yet. But I do think we test this today, and we reject it, fall through. But if we do break and hold through this, I'm going to target 402.8. All right. I'm going with option number one, reject this major trend line and come back through this daily demand zone, and let's look for new lows. That'll be it. Thanks, Hondo.
All right, Mo. Appreciate you. Thank you so much. That's going to do it for this morning's episode of Beat the Bell. We hope that you guys took some value from it. We'll be here on Wednesday morning at 8:30 a.m. Eastern time. And for those of you that don't know, we all trade live all day, every day in the Kane-Capital, well, just the Kane Capital Discord. You can go to kane-capital.com. It's a brand new week, people. Let's kill it. Earnings season is about to get underway. We wish everybody the best of luck trading this week, and we will see you back here on Wednesday morning. Have a good one, everybody. Good luck and manage risk. Be smart. Let's go.